Check 1, 2.
Go! Curious about real estate? Yes! Then you've come to the right place. Get the knowledge you need. Get over the fear and get started. This is the Michael Quarles Real Estate Show with your host, Michael Quarles.
Hello, everybody. Michael Quarles with podcast number 145. Today we have some questions sent in by investors. And remember, if you have a question, send it to support@bsffacademy.com. One more time, support@bsffacademy.com. Here we go. In the past, you said that if you could get a seller down to 85% of value of as-is value over the phone, then you can set up a meeting and go visit them and negotiate more. If the seller owes more than 85% of the as-is value, then do we kick the deal? Absolutely. So we should only be marketing for or to equity owners anyway, especially when we do direct mail. Now, when we're using pay-per-click, of course, we can't utilize any filters there from an equity-based perspective. So, if they don't have enough equity for me to earn what I need to earn, and keep in mind that we're wanting to at least earn 30% equity when we buy a piece of property. So if they don't have at least 30% or more, I'm not going to go out and see them. Great question. Next question. Are you still marketing in California? I am. Strange question. But we market to a lot of states. And so, right now, countrywide on our pay-per-click, but California, Texas, a little bit of Arizona, North Carolinas, Tennessee, all kinds of places. So, we're doing a lot of marketing, but we still market in California. Next question. If so, are California deals slowing down for you? No, not really. The way we market, because we are in such a large geographical area, we take our marketing and we push it through the areas that we want. And so we go all the way through all of our cities and then return back again. So California may be slow for us right now because we're not marketing at the very, very, very moment. Actually, we just started again in California about 2 weeks ago. So I guess we are. So we went through Texas. And once we came out of Texas, we came back into California. And so we'll see deals here now again.
Thanks for listening to Buy, Sell, Fix, Flip. We'll be right back. Are you running out of leads? It's time you tried Yellow Letters at yellowletters.com. Get motivated seller leads through yellow letters, postcards, zip letters, typed professional letters, greeting cards, door hangers, and business cards. Yellow Letters is a full-service marketing company created with your success in mind. Get the personal attention you need to get your direct mail campaign started and get in touch at yellowletters.com.
And we are back in 3, 2, 1.
Next question. I want to market to a certain county in my area, but the county has over 100 zip codes. Is there a way to narrow down the zip codes so I'm not running a marketing chart on over 100 zip codes? Yeah, I always think it's 60 minutes from where your hub is. Keeping in mind that's if you want to go knock on the doors. We don't use that philosophy because we never knock on a door. But 60 minutes. And so if you have 100 zip codes inside that 60-minute radius of you've got 100 zip codes. So I would absolutely do the homework to find out which zip codes would be the best, unless you can absolutely just market all 100 of them. If you have the budget, if you looked at and you had, let's say you had 50,000 people in those 100 zip codes that had equity and that proved to be a prospect, and you can market to them, don't worry about the marketing chart. But if you can't, then we want to make sure that we find the right areas to market to. And so, I think it's important. So one way or the other. So if you're going to market to everybody, don't worry about it. And if you can't market to everybody, then we have to worry about it. So hope that helps. Last question. In a recent podcast, you listed a few ways to fund deals, but you haven't discussed the topic as much recently. If the seller needs cash and they can't do seller financing or sub 2, what are the other options in order of best to worst from a money perspective? Or I'm assuming they're asking, when you're using cash, how do you find that cash, and which ways are better than other ways? The reality is the way that's the best is the one that costs you the least. So if you're self-funding, I think that's one of the most expensive things you can do because you're taking your funds away from another potential opportunity that you might have. Sometimes that's the only way we can buy the house, so we have to self-fund. If we're paying a hard money person or a private investor or someone points and interest rate, we're at least buying a house, so we'll mitigate that maybe with either a lower sales price or a skinnier deal, but we're still making money. We can bring on a partner, which something I would rarely do. Not too many people understand real estate the way I do, and it would be like, dancing with a kindergartner sometimes, so that's a little bit tough. But, I think the most expensive money is using your own. So the least expensive money is, of course, 0 interest rate, no point loan from somebody else. And, the reality is that a lot of times you can get seller financing. And we try like heck, even though we write cash offers before the thing's closed, to get some sort of financing. We don't always do it, but we try to as much as possible because it's so much easier and less expensive. And so I understand the problem. When you buy a bucket load of houses, and you need all the help you can get. So always be looking for where you can find your money and talk to those people, make good relationships and good decisions, and fall forward. Thanks for the questions. Talk to you guys soon. Bye-bye.
Thanks for listening to the Michael Quarles Real Estate Show. Get more info and stay in touch at michaelquarles.com.